Good morning, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We are going to hear from Aura Energy Managing Director and CEO, Andrew Grove. Now, during today's webinar, he will provide an overview and outlook of the company, and then we will take your questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this Aura Energy webinar, forward-looking statements may be made. I direct listeners to the company's forward-looking statement outlined on page 2 of its corporate presentation, and that can be found on the company's website, auraenergy.com.au. For Red Cloud Securities, I'd highlight this webinar as for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek out their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Aura Energy. Now, with that, I turn it over to Andrew to update the audience on Aura Energy. Take it away.
Thanks, David. We've got the presentation up on screen. So for people unaware, Aura Energy is an Australian-listed Mauritanian and European-focused uranium and future-facing metals business. We have our most advanced project, which is the Tiris uranium project in Mauritania, and just to highlight the slide is the picture of our exploration camp, and we are essentially in the Sahara Desert. So while we are isolated, we are a long way from impacting people, and the environment's pretty stark anyway. So it's a good place to develop a uranium mine, which we intend to do in the near future. As David mentioned, forward-looking statements. So essentially, we have two projects. We have the benefit of a very strong uranium price. The uranium price is up, sort of 100% over, almost 100% over the last 12 to 18 months. Really driven by a fundamental shift in the acceptance of nuclear power as a valid, base load, cheap, reliable, low carbon energy source, and we're seeing really strong development in nuclear power, and that's leading to a supply deficit and a future supply deficit in uranium. We've lived through 15 years of low uranium prices, so there's been no money spent on exploration or development of the existing mines. So there is a small supply deficit at the moment that has led to the price increase, but if we look out 10 or 15 years, there's a very significant supply deficit facing the nuclear power industry. So I think we're in a period where we'll see strong support for the uranium price. So if we look at our two projects, Tiris is our key project. We delivered a FEED study after a feasibility study. So with feasibility studies last year, we delivered the FEED study about 6 weeks ago. Really strong economics, NPV of 388 million, IRR 36%, 2.5 years payback using an $80 a pound uranium price. Very low cost is at $34.50 a pound all-in sustaining costs, and that's really driven by the unique nature of the mineralisation. It's very shallow. It's within 5 metres of the surface. It's free dig. There's no crushing, grinding or blasting required. There's a simple upgrade just through screening, which upgrades the in-situ grade 7 or 8 times and delivers to a relatively small 500,000 tonne per annum leach circuit. Uranium grades of 1750 on average and 2000 ppm in the first 5 years. And they're sort of grades you see from underground mines in Canada and not from open pit mines. So that keeps our costs down and makes this project really robust. But also, we've got a resource base of 59 million pounds now. We've just finished a drill program looking at extensions to mineralisation. We've hit lots of mineralisation, particularly in two areas, which we'll go through in a little bit more detail later. So we will see some resource growth in the immediate future, and resource estimates are underway. But that's really to show us that, while we've got 17-year mine life producing 2 million pounds a year now, there's lots of growth potential, and there's potential to expand the production throughput as well in the future. And really, we're sitting in a very underexplored, really potentially significant uranium province, and we've actually got about 13,000 square kilometres of new tenements under application, covering very, prospective uranium targets that, when we get those granted, we'll systematically go through and explore, and hopefully we can deliver some more discoveries in the future. On top of that, we've got a very, very large polymetallic project in Sweden. It's much earlier stage. We're currently at the moment going through the licensing for the exploitation permit and renewal of the exploration licenses. But we did deliver a scoping study last year on that. It's 2.5 billion tonnes of mineral resources. It's mainly vanadium, sulfate of potash, or SOP fertiliser, uranium, and a bit of moly, nickel, and zinc. It's a metalliferous shale, but the scoping study delivered really strong returns, sort of 400 to 1.3 billion NPVs, with a capital cost of $600 million, and that's excluding uranium. The uranium resources contained within that project alone is 800 million pounds at about 155 ppm. There is currently a uranium mining ban in Sweden, but the government is in the process of lifting that ban. They announced last month an inquiry into lifting the ban, and the inquiry results will come out in mid-May. And from that, they'll progress that into legislation to overturn the ban. And we expect the uranium mining ban to be lifted late this year, early next year. But there'll be some positive news around, that lifting of that ban, and it adds 27% to the NPV and contributes probably as a combined 14% of the revenue for that project. So it's a good value uplift to have uranium in there. And but we're not probably not getting any value assigned to the stock on this, so it's a bit of a sleeper and a bit of a free option, really. Company snapshot, you can see where the two projects are: Hvar in Sweden, in the middle of Sweden, Tiris in the northeast of Mauritania. Share price has been moving around a bit. Market capitalisation of Australian $123 million, 18/19 million dollars of cash at the end of the quarter. We just did an equity raise, and that's driven and an SPP coming off the back of that, driven some of the recent volumes. Major shareholders are Macquarie Securities, Cap, Lind, Asian investors, and a couple of the uranium ETFs. Just quickly go through the team. Phil Mitchell is our chairman. He's ex-Rio. He basically runs M&A for Robert Friedland. So he's got those really high-level corporate contacts, which are useful. Patrick is MD of Image Resources, of mineral sands, developing and producing mineral sands project in Australia, but he has a lot of deep uranium experience. So he's the technical guy on the board. Warren Mundine is an Australian advocate for traditional owner rights and government, so he brings that sort of view to the board. Brian's got a really deep understanding of ASX listed companies. Myself, pretend to be a geologist. Spent sort of 14 years being a geologist, including in uranium. I worked for Kojima at that stage, now Orano, in their technical service group in Paris for about 3 years. Then I spent 14 years at Macquarie Bank, Australian Investment Bank, doing mining finance and structured finance and equity investment and a bit of credit risk management. And then last 5 years I've been out in the corporate world, BD, business development and investor relations for Perseus, another West African focused gold project, and I ran Chessa Resources up until late last year when they got taken over by Fortuna Silver Mines. So lots of West African structured finance experience and operational experience. Will Goodall is our chief development or chief operating development officer. He's the technical brains trust behind the studies to date. And today our new CFO started, Mark Somley, who's also got extensive West African experience and has been involved in 3 recent mine developments and funding and contracts for development and operations in West Africa, Francophone West Africa particularly. So we're building up our West African experience in the corporate, and we're also working on our team in country. Look, I'll touch on the nuclear power demand a little bit, but I think most people are well aware that there's a strong demand for nuclear power, and that's driven a very strong price reaction to the spot uranium price, which is sort of $90 now. It fell off a bit, come back. But we expect, you can see the supply deficit on the right-hand side of that slide. We can expect very strong support for the uranium price going forward. We've got 436 reactors in operations, 62 under construction, and globally, they're expecting the nuclear power demand to double over the next 15 to 20 years, and that's without the commercialisation of the small modular reactors, which I personally think is a game changer in terms of energy supply, and particularly in small industrial and remote communities. People like Australia should be adopting those, even though they might not be. So let's have a look at Tiris. It's low cost, long life, near-term uranium producer with some really good growth opportunities. We've talked about the economics: 388 million, 36% IRR, £2 million over 17 years, but we're going to grow that resource, and we're going to demonstrate that in the near term that will be longer or bigger. Low cost are driven by this shallow free dig mineralisation and the beneficiation that mineralisation can achieve through simple washing and screening. We're development ready. We've got our exploitation permits, we've got our mining permits, environmental permits. There's probably only one permit that's outstanding to allow us to commence construction, and that's another exploitation permit around radioactive mining radioactive elements, but that's imminent. And then we've got a really supportive government. Mauritania has got a long history, not a big long history of mining. It's got three long-term commercial mines in the country. They really want to develop a uranium mining industry in the country, and when they see the potential for not just Tiris but other opportunities in the country. And basically, this year we're aiming to get FID or final investment decision, and then it's an 18-month final design and build. And as I've said, we've got near-term exploration resource growth that we'll demonstrate in the near term with the drilling program and the updated resources. And we've got a fairly large footprint over a strategic footprint over an emerging uranium province, and that I think in the longer term will deliver a lot more discoveries and resource growth. With these, a bit more granularity on the numbers around the project development. Capital costs of $230 million US dollars to build the project, and look, so that's the key for this year, is to pull together the funding for the development, and that'll be a combination of debt, equity, some prepaid offtakes, we'll have to put some offtakes anyway for the funding, and getting that package together will probably be delivered by the end of the year, and then we can make the decision to progress. So the image on the screen is a 3D representation of the process plant. Again, it's very small. It's 500,000 tonnes per year. It's dealing with really fine fine material, sub 75 micron material, and it's essentially it's an alkaline leach circuit, and it's designed around the Langer-Heinrich mine, the Deep Yellow's Langer-Heinrich mine in Namibia. It's exactly the same circuit, but on a much smaller scale because we're dealing with a very small volume of material. So it's a heated leach circuits, a large amount of filter presses and washing circuits, and then a resin exchange, and then goes into a uranium precipitation drying and packing unit, which is actually off the shelf, so it's scaled at 3.5 million pounds a year. So there's redundant capacity in that part. We've done some work on the capital cost to lift it from 2 million pounds to 3 million pounds. It's sort of $80 to $90 million. It's another mining beneficiation unit and some more leaching and filtering capacity. When we've demonstrated enough resources, that's what we'll endeavour to do after we got into production, is to step it up again. So the mining, this is the key. The mining is the key to why the project's robust and why it's a low cost. All the mineralisations in this weathered granite, like shallow weathered depressions in the granite. Granite's the source of the uranium. The uranium's it's a calcrete uranium deposit. The uranium's precipitated up near the surface where the evaporation point happens, and it's unique in terms that it started forming as a calcrete uranium deposit. Normally, they either the uranium gets encapsulated or encapsulated with the calcretes, or they get washed away with the rain. But this basically got preserved because it stopped raining in the Sahara Desert. So it's a young fossilised uranium project, and it's all free dig, and the uranium is quite fine, and it's bound. It's attached to the particles, the weathered granite particles. So we basically just dig it up, wash it, and screen it, and you can see the beneficiation process below us. That you mine it, put it through a scrubber, which is the washing part, put it over a set of a double deck of screens to take out the minus 75 micron fraction material. So you get the clays, the uranium, and some really fine weathered granite particles. So you're getting 13% of the mass, 91% of the uranium, and then that's just put in a surge tank and pumped to the process plant at quite high grades. So, and the waste material just gets backfilled into the plant. That's the key point in terms of when I've only been in the company a couple of months. So that's the key point that I spent on DD to make sure that worked. And there's 150 variability tests, pilot test work program to clearly demonstrate that beneficiation works. And it's a very simple size fraction distribution and size fraction separation. It's not relying on any other characteristics of the material. It's just size, and screening happens in every process plant in the world. So all the results of that come out with pretty consistent results. So that beneficiation works. There are other things in the process plant that we do have to manage. We have to manage clay, chlorides from the water, and sulfates from the ore. Sulfates consume the reagents. Clays can create some issues with viscosity if they get too much clay in the feed material, but we've got a very large amount of flexibility in the mining because the ore is basically at surface. We've got about 4 days of leach capacity in holding tanks prior to leaching. So there's a lot of redundancy built into this process design that we can manage the components that may cause us issues when we get to the processing plant. We've got a big RO plant to make sure the water and the leach circuit's nice and clean. And we have a separate water circuit for the beneficiation circuit. So a lot of the things that potentially could cause us issues, we've taken into consideration when we've done the design. And it's probably why it's partly why the capex is a little bit higher than you'd expect for a very simple process plant. And you can see the production flow sheet schedule over the 16 or 17 years, very high over the first 6 or 7 years at circa 2 million pounds a year, really high grades at circa 2,000 ppm. So quite robust. That first 10 years is really well defined in terms of resource classification. It's only 15% inferred, the rest is measured and indicated. And there's a bit more inferred over the back end of the period. But as we've said, we're expanding the resources. So resource tail and reserve tail for funding is not going to be an issue with this project. It's a nice stylised view of the process. So we have basically these are the mine sites, the beneficiation. There's a number of resources and they're quite spread out, 20 or 30 kilometres apart. So at each mine site will have a small mining fleet. We're only mining 6 million tonnes a year of total material, and if we've got 4 beneficiation units, so we're only mining 1.5 million tonnes per year on those. We'll probably make 2 bigger ones in the end, but so they're very small mining, free dig, flat material, 5 metres deep. So they're not going to work very hard. So we're mining at the mine. We'll put them through scrubbing, screening, beneficiation, take the fine material, pipe it to the centralised processing unit. We'll have leaching, filtration, ion exchange. All the waste goes back into the pits and backfilled behind in the pits. And then we're going to yellow cake precipitation and packing unit, which, as I said, is off the shelf. And then when we start producing yellow cake, we will, we're 2 million pounds a year is only sort of just a bit under 1,000 tonne a year. So we'll have yellow cake gets put in drums and put into secured sea containers. We'll have a convoy of sea containers every couple of weeks coming down from site, which is, a fair way from port, 1,700 kilometres from the port of Snapshot. They'll be escorted down to the port with rest areas along the way, and then it'll be shipped up to the port of Tangiers and transshipped and put on another ship and taken up to the converters. And we're working with Orano, who have a very large uranium transportation business, yellow cake and fuel rods and spent fuel and the like. So we're working with them on the sea transportation of the yellow cake when we get to that point. There's an area in the port at Nouakchott already that's licensed for radioactive material. The Port of Tangiers is allocating an area for that as well. And then depending where offtakes goes, depending on where the yellow cake heads at the end. We can have a look at this sort of exploration and layout of the project. The little insert map shows you where the main project, the Tiris East project, is. The star on the image is where the central processing unit will be. The red blobs are underlying the image is the radiometric anomalies, which is the targeting tool we've used to find the uranium. The red blobs are the defined resources. The black dots are our recent drilling program, and we've found quite a bit of an extension of mineralisation at Hippolite South and Sadi particularly. The green outlines are some of our applications, and you can see on the top left-hand corner of that image is a very large radiometric anomaly under one of our application areas. Every other large radiometric anomaly holds defined resources with the current drilling. There is some historical drilling on that, and there is mineralisation there. So you can see that, easily see that we're going to keep finding uranium mineralisation in this area to support the future mining operation or expansion of the mining operation. We'll just zoom in on a couple of the areas so I'll go back to Hippolite South and Sadi. Sadi's to the right, Hippolite South's to the left of the processing plant. Particularly Hippolite South, there's a 3 to 4 kilometre extension around the known mineralisation over a high radiometric anomaly that hasn't previously been drilled. Some very good grades going through that. So that will add significantly to the mineral resources, and also in Sadi, you can see that there's to the south for another kilometre or 2 kilometres to the south of Sadi. There's the mineralisation continues. Particularly interesting in Sadi is a lot of the mineralisation doesn't actually overlie high tenor radiometric anomalies. Historically, we've seen with the high tenor radiometric anomalies, the darker red blobs is a good correlation of mineralisation. And historically, we haven't drilled the lower tenor radiometric anomalies, but we are actually seeing some good mineralisation under some of those. So that this goes to show that there is still more prospectivity in and around our currently defined resources. And so the drill program's being completed. We've still got another batch of results to come out, and the resource estimate's currently underway, so we'd expect that to be out this quarter. So what are we got to do to get to basically get to FID at the end of the year? At Tiris, as I said, we've finished the drilling, mineral resources underway, so there's a good bit of news flow there to demonstrate there's resource growth. We're building up our team to be able to execute this project. We recently restructured a historical offtake agreement that we had with a trader, Curzon. That offtake was done when the uranium price was much lower, and it was around $50 to $53 a pound, and we've managed to negotiate that up to sort of mid $70 a pound for the fixed portion of that offtake, 150,000 pounds per annum, and another 150,000 tonnes per annum at spot with a smallish discount. We are and have been continuing negotiations and discussions with offtake partners and utilities. We've got a ex-Rio Rossing uranium trader working with us and has been working with us for a while, and he's been in discussions with the tier 1 US utilities, European, French utilities as well. So we'll look at locking down a couple of more offtakes. I'd expect the banks to require 60 to 70% of the production contracted over the debt period, just to give them certainty around cash flows. The big, like most single asset companies, the big hurdle is funding to get this project up and going. We've started engaging with debt arrangers, talked to a number of banks. That's my background, structured finance. There is a reasonable amount of capacity within the project for debt funding. It's quite a robust project. The limitation on the debt funding is really the tenor of the loan that the banks will give out. They generally don't like going beyond 4 years, no matter what happens. But there's other ways we can top up the structured or the third-party funding outside of coming back to shareholders to fill the gap. There's prepaid funding, particularly from the traders, for a reasonable amount of money now for some offtake. We're looking at strategic investors. There's some other sources of longer-term funding for equipment finance and that sort of thing. And we're actually going back and having a look at where can we optimise our capital and bring down the capital so we can squeeze that equity gap as much as we can before we have to come back and fill it. In terms of FIDs, the main technical thing we have to do is prove up the water resources. We do have some water resources right near the mine site. They're not sufficient for the full project. But 100 kilometres to the south is a big sedimentary basin that runs across a number of countries, and it does contain a lot of water. A few hundred kilometres to the south west, there's the Mauritanian Iron Ore Company, state-owned iron ore company, SNIM. They take out significant volumes of water out of that basin. There are some drill holes in that basin near our project that contain water. We'll go out and drill that in the near term. We'll get the water from there, but I'll need to put the drill holes in and do the pump test to clearly demonstrate to everybody that there's more than sufficient water. So we'll probably be getting that water for about 100 kilometres south of the project. But we are in the Sahara Desert, so water is one of the key elements to making sure this project operates flawlessly for the period, its whole life. There's a few other engineering and pre-development activities we need to do, but essentially it's it's filling that funding gap for us to be able to make that final investment decision, which we're hoping to do by the end of the year. And then it's an 18-month timeline for final design and construction. It's a relatively straightforward construction in terms of there's no big equipment, like there's no crushing, grinding, that sort of thing. It is remote, so the logistics is a little bit more challenging than normal projects. The water pipeline's a long way away, so that's one of the things that needs a bit of time to put into construction. It's a pretty straightforward project in terms of pulling it together once we get the funding together. So I'll give you a bit of a highlight of Hvar in Sweden. Massive polymetallic project, 2.5 billion tonnes of resources. It's a metalliferous shale. It's largely vanadium, sulfate of potash, uranium, moly, nickel, and zinc. The contained uranium resources alone are 800 million pounds, so it's probably the second or third biggest uranium deposit in the world. It's probably second to the one next door, contiguous one next door to us, which is 1 billion pounds. It's lowish grade, it's 150 ppm, so it's part of a polymetallic mix, and it does represent a fair bit of value in our project. So we ran a scoping study last year, and that excluded uranium because of the uranium mining ban. But if we add uranium back into that at $65 a pound, we lift the NPV by 37%, and it represents 14% of the revenue. At current uranium prices, that'll be a bigger portion of the revenue, and will make that project even more robust. And really, the government is committed. Now, went to both Mauritania and Sweden recently. Met with the leaders of the two of the main ruling parties in Sweden. They're very committed to getting rid of the uranium mining ban. They're committed to doubling their nuclear power capacity. We've got six nuclear power stations now. There's 2 planned for construction, and they're going to double that again in the next 10 or 15 years. So they're quite a progressive government. They want to facilitate continue Sweden as a European mining country. And there's not only lifting the uranium mining ban, they're doing some other legislative changes to make it easier for people to move through the environmental and licensing process. It'll make it easier, but it's still a long pathway. So look, in reality, we're still, if we had the capacity to develop this project ourselves, we're still 6 to 7 years away before we're even in the point of making an investment decision. This year is about securing our tenure and then looking at, once the uranium ban is lifted and we've secured our tenure, looking at how best we get some value for this project, whether it's a partner or maybe once we're in production and we have a bigger market cap, we might be able to deliver it ourselves. So these are the metrics of the scoping study. The capex is quite high. We historically, people have looked at these projects. You can selectively mine or extract the uranium with a very large biological heap leach, but I don't think that's tenable in Sweden. The big footprint, uncontrolled water in an open uncontrolled water. I think Sweden's got very strict environmental control, so we're proposing an autoclave and a leach tank leaching, and all the water is contained within vessels and tanks, so we have much more control over that and minimise the potential impact on the environment and the water. Water is a very key focus for residents of Sweden. So look, in summary, the thematics for uranium and the uranium price are good, driven by the strong shift towards back towards nuclear power. Tiris is a near-term producing uranium mine. We can be in production in mid-2026 with strong economics, low costs. It'll be a viable uranium project through most of the uranium price cycles that we'd expect in the future, and that's really driven by that shallow free dig mineralisation that can beneficiate quite simply through screening to really high grades into a small leach circuit. And we're really well leveraged to the uranium price. We've got good growth potential, immediate growth potential around Tiris, longer term growth potential around that northern Mauritanian region with a very large footprint of tenements under application. And we've got a big sleeping giant in terms of Hvar and its contained mineral resources. And, in reality, the company has control over 860 million pounds of uranium resources, particularly once the Swedish government lift that ban on uranium, then that's a valid resource. And so we're moving towards getting this thing into production and getting towards production, getting it into production in the near term, and benefiting from a strong uranium price. And I'll hand it back to David for moderating questions.
Great. Thank you very much, Andrew. Great presentation. So thank you for joining us today. Now, let's kick off the Q&A portion of the webinar. Reminder to everybody on the line, you can type your questions into the chat box at any time. We already do have some questions here. Andrew, I guess there have been some issues impacting other uranium companies in West Africa, specifically in Niger, where there seems to be a fair bit of colonial animosity with France. Now, what's the temperature in Mauritania itself? Would you expect any similar social unrest there?
No, look, I think all the negative news coming out of the West Africa doesn't help us. We do have to, a lot of the investors see want something happening in a different country and negative news, and they just lump it all together. So that doesn't help. It doesn't help, but it makes my job a bit harder in terms of convincing people that Mauritania is a good jurisdiction, which it is. And look, it's interesting that Mauritania it left the unified francophone group of countries quite early in terms of the West African franc. So they've had their own currency for a long time, and you can see a lot of the ones that have the combined currency of, it's sort of pegged to the euro. It was pegged to the French franc and then went to the euro, and that's created a lot of inflation for them and created it, and they perceive that as France controlling some of their economic activity and economic wealth. They've never had that in Mauritania. They still like the French, which is, it is unusual in a lot of francophone countries. It's a strong link to the military. They're quite a military ruling government. We've got an election this year with the president, and he'll win his second term. US have got a very strong influence in Mauritania. Look, I first went to Mauritania in 2006 when I was working with Macquarie Bank. We banked Tazias with a big gold mine in country, which now owned by Kinross. It was originally owned by Rio Narcia and was bought out by Redback and then I think Dundee and then Kinross. So that's producing 600,000 ounces a year. So it's probably the second biggest gold mine in West Africa, and that's been going for nearly 20 years. First Quantum's got a copper iron ore gold mine there as well. It's been operating for a long time. They've got the state-owned iron ore company that's been operating for 20 or 30 years. So they've got a lot, they're a massive mining industry. They've got a long mining history. There's the oil and gas BP's back in there in a big way and developing significant offshore oil and gas reservoirs. So looking at the last 10 years, there's a very stable government, very supportive on developing new industry. So it's a big country. It's only got 4 million people, and it doesn't have a lot of arable land, so it needs industry to help support it. They're putting a lot of investment into solar power generation. There's a lot of sun, and there's going to be they're developing a big solar renewable hydrogen facility up in the northern part of the country as well.
Mm-hmm. Okay. Now, your mining plans at Tiris are quite simple. It helps keep risks down. Can you expand a little bit on how attractive a superficial deposit can be here?
A superficial, sorry.
Yeah. Just can you maybe expand on how attractive a superficial uranium deposit might be?
Yeah. Okay. Look, it's spread over a fairly. You saw the map where the deposits are, so they're quite expansive deposits, given that they're not that thick, but they're only within half of them. Most of them start sort of from half a metre from surface, or at least 1 metre down at the most. It is just a loose, unconsolidated gravels and sands, easily excavated, and we've done a number of test pits to test the diggability of these things. So what it gives you is ultimate flexibility in mining. You don't need, and we probably don't want, dry stockpiles, because the wind blows the mineralisation, which is somewhat a little bit radioactive around the place. So it gives us ultimate flexibility. We can go and mine any bit of the ore body whenever we like. We don't have big pre-strips. We don't have to go through stages in a pit to get to more ore. We just go to another area and dig it up straight away, and we'll put it straight into the idea is to get it wet as soon as possible, so we get rid of that health issue and the potential health issue around the dust. But it's 0.7 strip ratio. We're mining 4 or 5 million tonnes of ore, and so 6 million tonnes of material a year on 2 or it's currently on 4, but we'll get it down to 2 or 3 mining areas. So they're only doing 2.5 to 3 million tonnes a year free dig. So there's not going to be a big demand on the mining. And one of the unique things about uranium is that you can get on grade control. You get basically instant feedback with the radiometrics. You don't need to put it through a lab or anything like that. So you can have scintillometers attached to your equipment, or your grade control with the probes, so you can get instant feedback on grade. We'll also do some probing for clay and others, so we'll build up a detailed geomet model search. We know that the small scale variability, and so we can manage that through the plant as best we can. So yeah, look, this just gives you a lot of flexibility, and mining's a big cost on a lot of the projects, and we basically deliver high grade feed in post beneficiation for $8 a pound into the plant.
Mm-hmm. Okay, and your plant is designed to be modular, and that should certainly have some benefits when you want to build. That said, I think you want to start out of the box at full expanded production, right? Can you maybe elaborate a little bit on your reasoning not wanting to start smaller and maybe ramp up production, but go straight to, say, 2 million pounds a year?
And that's probably one of the reasons that ore in the stock market hasn't benefited relatively as well as a lot of the other uranium stocks. So a small project in Africa doesn't get market attention to start with. It doesn't matter if it's gold or uranium or any other commodity. A small project in Africa doesn't get a lot of attention. When I did my DD and I had a look at this small project, it didn't make any sense because it didn't make a huge amount of cash flow. The small project, it was burdened by this offtake, plus also, you've got a fairly high fixed component in all mining operations. So it didn't actually make a huge amount of money until you ramped up to the commercial scale, 2 million pounds a year. So it didn't make sense, and you weren't going to get market support for a small project. Okay, you de-risk it a bit, but you still got to fund development. So, it makes good money at that commercial scale, 2 million pounds or more. 2 million pounds is about, the capex is about right for a company our size. So, and for the resource base as it currently stands, although it's going to get bigger, obviously. So yeah, look, it makes more money. It makes commercial sense. It'll attract it should attract investors. It should also attract, our partners in terms of offtake partners and funders and things like that.
Mm-hmm. Now, could a larger resource expansion help you to get to even a higher run rate? Is that something that you're...
Yeah, no, that's the idea. I think, we're currently 17 years at £2 million. If you went to 3, you're getting close to, you're bringing the mine life back to sort of 10-ish. It's really just limited by, we're not mining constrained. We can add capital to the plant. So the idea would be to expand once we've got enough resources to expand. But once we're in production, if we add more burden to the capital to get over, so it's what we said is $80 to $90 million to go from £2 to £3 million a year. The back end of the plant's already scaled at 3.5. But we can do that once we're up and running. That would mean there's a $300 million capex, and where we currently sit, that's going to be pretty hard to get over. I think the main idea to do the drilling, and we just did the near mine stuff, is to show there's resource growth, show that the project can expand, and there's more, there's capacity to make this a bigger project, and we have a clear runway for that.
Mm-hmm. Okay, so your resource right now about 59 million pounds, and your arm waving here a little bit, potential for, let's say, 90 to 100 million pounds. Your drilling is becoming, you're getting some really good results there. Good assays from below strong radioactivity anomalies, but you're also getting good assays from below weaker radioactivity anomalies. Yeah. So maybe how much disequilibrium might be present? Does this really open up even more exploration potential than you might have anticipated?
Yeah, no, start with not using assays, we're using gamma probes. So the disequilibrium is one of the most consistent disequilibrium, if you want to get into technical things, disequilibrium. We've done a lot of geochemical assays and coring and things like that. So because the whole deposit's quite young and it all got frozen in time, the disequilibrium is very consistent across all the deposits. It's not like a lot of the roll fronts and other things where the uranium's moved around with time, and that creates a disequilibrium issue. So we get a 1.25 upgrade from gamma to equivalent uranium grades. But yeah, I think getting those grades in the lower tenor radiometrics is quite important. The radiometrics are all airborne radiometrics. They do get masked by sand cover, and there are some sand dunes in that area. They could get masked by just being a little bit deeper. You're going to get a higher radiometric signature if it's nearer the surface than it is if it's buried 1 metre or 2 metres or 3 metres. So we are getting some, I think that does open up the prospectivity. It's more a geomorphology issue, trying to map where these little low-lying swampy areas that probably were, and tracing those. But the new tenement applications overlay a lot more radiometric anomalism that we haven't drilled or have drilled previously. So look, what we see is what I see is around Tiris East is where we're going to start the project. The immediate resources around there are 49 million pounds. We'll grow that this quarter with the new resources. That could grow to circa 80 to 100. But there's a 10 and 11 million pounds at Kik, which is to the west. I haven't done any more drilling. We've got lots of tenement applications around there as well. We dropped a lot of them during the low uranium prices because we couldn't afford to maintain them. Some of them were re-picked up. So I think you'll get potentially 2 or 3 production centres out of this northern Mauritanian region over a longer period. And then we're only looking at the near-surface Cow Creek hosted type mineralisation. There's a whole lot of structural sites that could host other styles of mineralisation. There's a big unconformity down where we're going to get the water from that could host other styles of uranium mineralisation. That granite is the source, and it's quite an extensive granite. I think it's running about 50 or 60 ppm. So, there's a lot of uranium potentially running around that system when it was still raining, particularly, that could have other sources of sites for them.
Right. Okay. Now, how much of the 230 million initial capex is related to infrastructure? This mine, it's located in the middle of the desert. I imagine you have some challenges when it comes to road, power, water.
Yeah. Look, it is remote. Everything's got to be standalone. So power is a standalone hybrid solar diesel, and diesel is one of our biggest input costs. So we are doing a power optimization study in terms of any way we can reduce the reliance on diesel, the better for our costs. But given that the total installed generation capacity is only 16 meg, is very small, and some of that's in the mining sites and the power and the water. So probably about 12 meg installed capacity for the plant and the camp. So it's a pretty small power station in reality. Desert access is interesting. Currently, it's 600 kilometres of desert, no roads to get to site. There's lots of trucks out there for supporting us, and there's some artisanal gold activity about 60 k's to the east, and some exploration company by one of the Emirati companies has got a permanent exploration base out there. So there's trucks out there. Surprisingly, there's quite a bit of activity out through the desert. There's a toll treating plant they built about 400 kilometres to the back towards the bitumen road. So there's trucks carting ore across the place all the time. So it won't be a nice road as we're used to in most of the mining sites. It'll be more a desert track, and we'll need to upgrade. We've done a road survey. We'll need to upgrade 6 or 7 or 8 or 10 kilometres of sandy areas where they might get bogged. So of the capex, there's a fair bit in terms of logistics because it is expensive to bring it all out there. There's a little bit on the road upgrade. It's not particularly big. The water's $20 million for the remote water location. Power, we've assumed a lease arrangement. But yeah, look, it's not as much as you'd expect. It's more transportation and logistics that are quite expensive. And things in terms of our capex optimization, we've got, because we started in a modular fashion, we've got 4 mining centres, 4 mining beneficiation, there's trommels and beneficiation units. I think what we're going to do is we'll probably start with 2 bigger ones. That gets rid of 2 small mining fleets and 2 trommels, 2 sets of screens, and a set of pipelines each. So I think that's an easy win on our capital because we've got some big areas we can start with and just stick bigger units out there, and you can always add a smaller, more flexible mining unit later on when you need it.
Okay. So as far as upgrading your team, who might you need to add to management in the short term to go from developer to construction and production?
Yeah, look, no, that's right. As I said, we've just CFO started today. We need a development manager, particularly someone who's going to drive that sort of, the development, the planning and the execution of the development. We've talked to a number of people. We also talked to some engineering firms that might take on that owner's rep type function. Finding development managers is a challenge, and getting the guys who have got experience in West Africa is the challenge. So corporately for us, that's him and his team, and then eventually the general manager, the mine operating guys are the key. In country, we've got a geologist and commercial director. We've got the government relations. We're talking to a really high level country manager that will probably come in and help us. We're getting some financial functions in there. We've got some other support. So it's more about, in country, it's probably more about building out the government and community relations side of it, environmental and safety side of it, because it's quite stringent. Dealing with radioactive materials quite stringent. So we've got a number of resumes, and it's well underway, that sort of recruitment for building out that capacity to actually operate and make sure we bring the community and everyone else along. Not that we're directly impacting people because we're quite remote from any of the villages, but we will be transporting radioactive material down the road eventually. So that'll take some communication, and we can bypass most of the towns, but it'll still take some communication.
Right. Okay. Now, with respect to project financing, you mentioned potential for further offtakes or debt funding, strategic investors. I guess, what's your preferred path, and have you considered partial sale of Hagen for sort of non-dilutive funding of Tiris?
Look, if we could get, we're open to all options. My preferred option is to get a couple $100 million from the bank or a prepaid for the same amount, and that's probably my preferred, but I don't think that's going to happen. It's going to have to be a mix of things, and we're going to have to be, we'll be creative in terms of getting it all together. But we're open to all sorts. We're open to investments into Tiris itself to help fund the development. There's people who want offtake and willing to pay for some of that. So that's interesting in terms of where they'll go with the potential funding. Hagorn, I don't think we'll get value until we've secured the tenure and uranium bans lifted, and all that's pretty soon in reality, and it doesn't cost us much to get to that point. So we'll probably hang on to it until that.
Okay. So, sorry. Okay. Yeah. So we're almost at the top of the hour here. So maybe one last question. The winds of change do seem to be changing in Sweden with respect to the uranium mining ban. When might we hear something more about which way the government might go, and how might that change your focus on that project and your spending?
15th of May will be the results of the inquiry. We've met the inquirer. So she's running within a scope that's been given to her from the government. So we'll hear something about on the 15th of May. All indications are that they'll recommend a lifting of the uranium mining ban. How that fits in with the current mining legislation to be determined, but I think they're quite keen to facilitate it, bring it in as a normal mineral. So we'll see some noise about that, and then they'll take it to Parliament. And then, all accounts, it's a 6 to 9 months process to get it through Parliament to get enacted into law, and they want to make sure that it's robust legislation, so it can't be overturned by the next government. Right? But they're doing other things. So the 1st of July, there's this legislation in Parliament on the 1st of July that takes some of the environmental side of things, the Nature 2000 areas, which we don't have in any area, we have some near it, takes that out and puts it back into the environmental licensing where it should be. At the moment, you've got to deal with it before we've actually even really defined what your project looks like. Now they're putting it back into when you get your environmental impact, do your environmental impact study. So they're doing things to make sure that mining can continue and facilitate mining in the country, because they've got a long history of mining in Sweden.
Perfect. Great. Well, it sounds like a lot of things going on. So Andrew Grove from Aura Energy, thank you very much for joining us today.
Thank you, David. Thank you.
Thank you, everybody else, for tuning in. Red Cloud will be back next Tuesday afternoon when Taylor sits down with Kootenai Silver. That's April 30th at 2 p.m. Eastern. So have a great day, everyone, and thank you for supporting Red Cloud's webinar series.